So is Canada's housing market actually waking up? According to the RBC Assistant Chief Economist Robert Hogue, the answer might be yes. He posted an updated outlook on the Canadian real estate market just a few days ago. Now, don't pop the champagne just yet. The patient is still in recovery, the vital signs are mixed, and frankly, the diagnosis all depends on who's holding the stethoscope. Now, before we go any further, like, share, and subscribe. This is where we cut through the noise, call out the fluff, and bring some awareness and clarity to the Canadian real estate market. Doing that helps this channel grow and gets this information to more people who are tired of sugar-coated headlines and want the real story. So let's jump into it. In May, we started to see a little pulse. Local real estate boards from across the country reported an uptick in resale activity. The first real signs of life in months. Toronto, Ottawa, Calgary, Edmonton, the Fraser Valley, Saskatoon, and Regina all saw sales climb, rebounding from the breakdowns earlier this year. It's not a full-blown comeback, but it's a flicker, a twitch perhaps, and in this market, that counts for something. What's really going on behind the shift? Trade war pressure has started to cool in people's minds. Some of the worst case economic scenarios are fading away. Tariff tensions have de-escalated, at least temporarily, and that's helped inject a bit of confidence back into the market. But don't get too cozy. We're not out of the woods yet. The recent doubling of steel and aluminum tariffs is still hovering like a storm. There's uncertainty baked into everything right now. But in real estate, even the feeling that things might be getting better can be enough to start a momentum. So let's zoom in across the country, because right now, what's happening isn't uniform, not even close. Southern Ontario and parts of British Columbia, still the country's most brutally unaffordable markets, are dragging. Hogue puts it bluntly. These regions are close to cynical lows. In plain English, we're still in the gutter. Sales are sluggish, confidence is weak, and prices are under pressure. The MLS home price, that's the benchmark we use to measure home values, dropped again in May in the Toronto region. Hamilton, also Kitchener-Waterloo, Cambridge, Vancouver, and the Fraser Valley. These aren't random blips. These are sustained downward trends. Let's take a look at Toronto. After a brutal spring paralyzed by a trade war anxiety, the market's showing some signs of stabilization. Resales rose about 8.4% from April to May. That's 2 months of increases. Sounds promising, right? Not so fast. This is a market that was on life support. So yeah, a pulse is good, but we're still far from recovery. Sales volume is still way down compared to last year. Pre-construction is still beat up, and prices, they're still soft. The MLS price is down 4.5% year over year. GTA is even higher. Even with that tiny month-over-month tick upward, the bigger picture is clear. We are still very much in a correction. So be careful how you read the headlines. And here's the kicker. Inventory in Toronto is at its all-time highs in decades. Buyers have choices, lots of them. That means leverage is shifting. Buyers are in control. Sellers, you're not driving the car anymore. And that brings us to the real truth about market data. How you frame it changes everything. Say sales are up month over month, and people hear optimism. Say sales are down from last year, and suddenly it becomes caution. Same facts, different framing, and this is why I say read the fine print, not just the headlines. Now let's check out Montreal, which compared to most markets is holding up incredibly well. Yes, the trade turbulence slowed things down a bit, but it didn't kill the momentum. Resale transactions only dipped by 2% between April and May. That's a scratch, not a wound. And prices still climbing. Single family properties were up 8.6% year over year. Condos up 4.3%. What's working in Montreal's favor is balance. Supply and demand are relatively aligned. We really can't say this for Vancouver and Toronto, can we? But for Montreal, things might be changing. More sellers are anticipated on entering back in the market, and it could change their market conditions. If that continues, price growth will just moderate. But for now, Montreal is steady. Now to Vancouver, where buyers are holding the upper hand. We estimate May was the sixth straight month of falling resales. Let me say that again. 6 straight months in a row of slow sales. This market is slowing, and it's slowing hard. Inventory off the charts. May saw the highest number of listings in 12 years. A lot of that is coming from completed new condos that never sold, and sellers who waited too long and now have to compete even harder. Prices are responding the only way they can. They're dropping. Vancouver's MLS price was down 2.9% from a year ago. And with no sense of urgency among buyers, sellers are getting squeezed. This is a buyer's market, no doubt, and it's not subtle. Meanwhile, in Calgary, we've got a completely different story. Sales jumped over 8% in May, rebounding after 3 months of dips. But here's the difference. Calgary's fundamentals are still strong. Job growth in the region is nearly 3 times the national average. Population growth is healthy. And homes still reasonably priced compared to the insanity in Ontario and BC. In Calgary, prices, they are cooling. The composite MLS price was down 2.5% from last year, but that's a soft landing. Builders have increased supply, and that's kept things from overheating. Calgary is rebalancing, not collapsing. That's what a healthy market looks like. And then we've got the rest of the Prairies and Atlantic Canada. They're holding the line. Edmonton, Saskatoon, Regina, Quebec City, St. John's. These markets are steady, not booming, not bleeding, just holding. They weren't overpriced to begin with, so they don't have so far to fall. But they're still vulnerable to macro pressures like inflation, tariffs, interest rates, you name it. All right, guys, let's look at some more data from the report. All right, so this chart was in the RBC report, and it's the home resales in Canada, and it's including May of 2025. You'll notice that it is a positive graph. We are slightly an uptick in sales that are reported. But again, I want to put a lot of caution on this because this is not uniform. Every province is doing its own thing. And even to note that in the province, certain areas are doing better than others. So take this information with a grain of salt. You should be looking at more specific local data. So let's look at the Coles notes out of the RBC economics report. So again, this is national. Home resales are up subsequently for 2 months nationwide, rising 0.8% to 3.6% in April and May, respectively. Southern Ontario and British Columbia are still soft, where resales are barely off cyclical lows. Total inventory of homes for sales climbed to a 6-year high, sustaining intense competition between sellers. The national composite MLS home price index fell 0.2% from April, a fraction of the average 0.9% drop in the prior 3 months. So again, that is national average. And prices continued to fall in Ontario and BC, like we've talked about, but stayed on an upward trajectory in Saskatchewan, Quebec, and most of Atlantic provinces. All right, so let's look at some price trends that occurred across the country. And we're comparing April to May and May of 2024 to May 2025. So for Canada, home resales increased this month compared to April of last month by 3.6%. And if you compare year over year, we're down by 4.3%. New listings, of course, were up from April to May by 3.1%, and we're also up nationally by 8% year over year. MLS price index, I'm just going to jump to the year over year. We're down 3.5%. Now, Toronto home resales, like the report has stated, we're up 8.4% in transactions, but we're down by 11% if you look at it year over year. And new listings, just skipping over to the year over year, like we're up 17.2% in new listings. So this is where you keep hearing it's a buyer's market. And MLS home price index, we're down 4.5% and just a nothing gain month over month. But let's scoot over to Vancouver, where Vancouver in the month of May saw a decrease in transactions by 1.2% if you compare it to the month prior. But year over year in Vancouver, the resales are down. So transactions are down by 17.5%. So you'll notice on this chart, they have the steepest drop. So new listings decreased, which is interesting, April to May by 5.2%. And year over year, there's an increase in supply by 2.8%. Now we're looking at the home price index. It went down from April to May by 0.8%, and it's down by 2.9% year over year. Interesting stuff. So what does this mean for you? Be realistic with the times. Read the headlines and know what the market update is really saying. Anyone can manipulate data to portray a narrative. Stay in tune with the latest economic updates and you can find many opportunities. They're popping up. Believe me when I say that. Bottom line, this isn't a uniform recovery. It's a bumpy, unpredictable correction. It's not over yet. If this video gave you clarity, hit that like button, share it with someone who's stressed out over the headlines, and subscribe to the channel. Let's grow this community and keep cutting through the noise together. We're not just here to sell homes. We're here to help you make sense of the madness, take back control, and make smarter decisions in this uncharted market. Things are constantly changing, and it's so important to stay in tune with the updates. Until then, thanks so much for watching and wishing you all a very good day. See you in the next one.